G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. All right, let's go. So today's video, I want to talk about inflation and the CPI numbers that came out for the US last night, Australia time, 10:30 p.m. And we can see that I go up to the top and the BLS website, Economic News Release, that I'll just skip to this bit here. The all items index rose 3% for 12 months ending June. So year over year from last year, it rose 3%. So the expectation was 3.1. The analysts were predicting it because it was 3.3 last month, the predicted May's data. And then July, predicting June's data, came in at 3%, so below expectations, which is actually quite interesting. I was just predicting a lot higher, but we'll have to wait for that. And so it rose by 3%, a smaller increase than the 3.3% increase for 12 months ending in May, which I just mentioned. The all items less food and energy index rose 3.3% over the last 12 months and was the smallest 12-month increase in the index since April 2021. The energy index increased 1% for 12 months ending in June. The food index increased 2.2% over the last year. And you can see a table here that represents the all urban consumers city average for the US, and we had just June's data which came in, and this was June, minus 0.1, which was 3% for all items. Like I mentioned, that's 3% reading, of course, obviously. We had 2.2, which I mentioned for the food index, food at home. We also had energy, which I mentioned was 1, fuel and oil, which is quite interesting, 0.8. Said increase. We had utilities like gas, 3.7% year over year. This is all 12-month data, okay? It's year over year. This is not month over month. This is year over year. It's from a year ago, 3.7%. New vehicles, as you can see, it's gone down. They're cheaper than they were a year ago. Apparel, 0.8%. Medical care, up 3.1%. We have shelter, up 5.2%. Transportation, 9.4%. And medical care service, 3.3%. Now we'll go to the month on month. So from May's data that came out last month, because what happens is the CPI comes out for July, but it talks about June, what's happened. So last month was talking about May. This month's talking about June. So we can see that we had a minus 0.1%. So we've actually gone down in inflation for all items, okay, month over month. 0.2, it's gone up for food. Energy up 0.4. Energy commodities, it's decreased by 3.7%. So that's a really big decrease there. Similar to what happened in May from April. And then we have, I mentioned electricity. Let's wait, electricity for a sec. It's gone down 0.7. Fuel and oil, minus 2.4. New vehicles, we had a decrease of 0.2. Apparel up for less energy services. And shelter is up 0.2, which makes up a huge part of the index. And transportation's down. So yeah, that's what's data from the BLS, Bureau of Labor Statistics, tells us about inflation. All right, let's talk a little bit more about inflation. And a tweet by Henrik Seberg, which he shared, James E. Thorne. Remember when analysts were telling us 2022 to 2023 that inflation would be permanent. In 12 months' time, deflation will be what the Fed is fighting. Recession is coming. But first, blow off top. So this guy sees probably, is Q3 period to Q4. He predicts blow off top around that period, which he's mentioned in interviews to several people. And I watched the one with Wealthy on. He did. That was pretty interesting. And he did mention that, he predicts a rally going in the end of the year before a crash. And he reckons a really, really bad crash. So, yeah, very, very interesting prediction there. And a tweet he talks about, it's called deflation. No one should be surprised. And it's the 1 month percent change. And you can see over time, 2014, the old items, which I mentioned before. So that's just old items in that CPI index. It's gone down. 1 month changes. So they're seeing even more deflation. So this disinflation, like more decreases in that number, and that'll lead to the crash. Well, that's what he thinks. That's what Henrik Zeberg, he reckons, deflationary crash, not an inflationary crash. So inflation going up like we did in 2021, and that caused the Fed to go, whoops, inflation. They said it was transitory throughout the year, and then at the end of the year, they went, it's not transitory. We can't get a hold of inflation. We must raise rates and taper our balance sheet. So reducing their securities holdings and then raising rates to combat inflation, to bring it down. Okay, they're the tools that the Fed has, and they use their words to talk down the markets or up the markets. But in this case, they had to become hawkish and act on inflation. And what happened in 2021, 2022? Or end of that year, all throughout 2022, we had a crash. That was inflationary though, whereas this guy's thinking deflationary. All right, like we had 2008, we had a bad deflationary crash, and 2000, same thing. So we'll see. Investing.com, just in, gold prices jump over 1% as Fed rate cuts bets surge after cool CPI print. So massive move in gold. Look at that. Wow, that's a big move for gold. It's a big, big asset. 10 plus trillion asset. What do you expect? 1.6% move, and that's huge buying pressure for gold. So very volatile readings, and I can show you across the markets later on. But you can see it's a big, very volatile day. CPI numbers coming out. So very, very big move for gold on that news. Magnificent Seven, devil candle depicted. And the Magnificent Seven out of the stock market, highest 7 ranking stocks, had a big, big move down on the daily. We just shoot that red candle. It raised 1, 2, 3, 4, 5 days of upwards movement, down in one candle. Just looks like that, gone. So very, 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 very interesting why the Mag 7, the CPI news was good news, but they saw it, has, like, you see it's bad news, I don't think, but there must have been a lot of rotation happening. They're selling off, taking profit because it had such a big move. And I can show you on the charts why, okay, what the rotation was, okay. So we had the S&P, okay, and we had a big, big sell-off, 1% sell-off. We also had the NASDAQ, which is the 100 top stocks, even bigger drop, 2% drop. Massive move. It raised 4 days of price action, all right? So both nasty, nasty moves, but it was good news. CPI came in lower than expected. So where did that money go? Okay. Did it go into Bitcoin? No. Had pretty much a flat day. Didn't really do anything. We had a bit of a sell-off. I can say it wasn't really felt. We had to have a rally up and a rally back down. So we had a bit of a swing there. So 3% move, swinging up and down. And that's normal for Bitcoin. It's a very volatile asset. But as you can see on the right hand side here, transportations are up. Said rotation there, back into a more defensive style sector. A Dow Jones Transportation Index, as we can see, we're sort of coiling up in this triangle. I'll just, okay, cool, zoom out. We're breaking the upside. We're not out of this range yet. Still got a long way to go to break above, okay? But what really moved was the small caps. Look at that move. You know, I guess it's 3.5% move on the day. 4.7 from bottom to top. It broke out of this diamond pattern that I drew before. So we're seeing a rotation back into the small stocks. The big stocks are starting to give into the small stocks. So very interesting. This could be the start of something happening for the small stocks. So, and it shows it here. You know, look at this, 5.6% from NASDAQ versus the Russell that I just showed you, right? So going from large cap to small cap, big move. Big move. So, yeah, we can see really interesting times. Maybe it could be the end of this. This could be the top of the channel. This could be the it before breaking down. And we see some small stocks starting to catch up with the large stocks. And we can also see interesting the growth sector versus the value sector. So talking about defenses before, growth's given back to the value by 3% in a day. We have the semiconductor sector giving into staples. So interesting there. We have another sell-off. So rotations are starting to happen in certain sectors. But we also see an interesting breakout here by the KRE. This is a big move. All right, guys. 4% in a day, guys. It's, you know, from bottom to here is 6%. But yeah, a big move from the gap. I think it's from the gap. Yeah, so it's from the gap to there. I didn't measure it properly on the other one, sorry. But yeah, this is the gap, okay? So we've left a gap behind. What we fill, come back and fill the gap. Which usually happens. Gaps get filled. As you can see there got filled eventually. Gaps get filled, all right? You know, so yeah, big gap left behind and huge breakout for the KRA, which is the regional banking sector. So we're seeing relief there and we're breaking out of this big triangle. So no pain, it seems, for the regional banks just yet. The housing sector also saw a big shoot up, 5.73% move. I thought we were going to break down, you know, and sort of come back up and then just sort of break to the downside, but it did not happen. It smashed back up. So, yeah, very telling. It's very interesting that just after that one print of CPI, how much things can just change, you know. Is it the start of something or just a fake out and then come back down? We'll see. It's the only time we can tell. The VIX was quite volatile, up and down. We had a big swing from the, you know, this whole move, 9% move in the VIX, and then if we go down 8%, so 9% up and down swings, and this was stayed flat for the day. And yeah, we had yields. Talk about yields real quick. So this is today. Yesterday's move was a big move, 3% move in treasuries and 2-year yield. And you can zoom out a bit. We're right up here, guys. But when this starts to decline, all right, come back down to this support level. Okay. And trend out, and then we break it. That will be the sign, I think, when the Fed will have to cut rates. They see this and it's inevitable. Rate cuts will come. You also see the 10-year yield had a big move down as well. I'll zoom in a bit better so it's easy to see for you guys. 3.4%. Big moves in the years, and we're sort of in this triangle pattern, or this really ascending trend line. Will we break to the downside? Very telling. And this is really what I like to see. It's very, very interesting. We see a big move up here in the maturities between 10-year minus 2-year, 11% move from 10th to today. A day lag there, but it's all right. So yeah, we had moved there. Will we break to the upside there? Because we've been inverted for a very, very long time. As you can see, from July to July, 500 days. Yeah, 500 days, guys. Sorry. 736 days. 737 days. I got that wrong. Sorry. My apologies. But 737 days. So 2 years from 2022 July to now. So yeah, very, very telling. If we see a break to the upside in yields, inflation just keeps coming down. But really, it's basically uninverting. So it was inverted for a while because 2-year rates were higher than the 10 years. So short-term bonds were paying better than long-term bonds, which is why it inverted. Now, if you uninvert, 2-year will drop against the 10-year, and we'll see it back up. Now, another sign for Feds to cut rates. And when it uninverts, what happens? What happens, guys? I'll show you what happens. We get a recession. We get a recession. We inverted here. Sorry to laugh, but it's kind of funny. We inverted, uninverted, recession. I might zoom out to the weekly so it's a bit easier to see. We inverted, we uninverted. What happened? Recession. We inverted. We had a bit of a fake one here, right? And it went up and didn't do anything and it traded sideways and then inverted again and then uninverted. What happened? Recession. We inverted, uninverted. What happened? Repeat that line. We inverted for a long time. This is quite similar period of time. Let's just measure that one. So from August 78 to April, which is 616, so less than 2 years. So we inverted for a very long time. We uninverted, and what happened? Recession. We did it again. We inverted, uninverted, recession. And it doesn't go back any further, but it's a very, very telling sign that it's inevitable, guys. Recession is inevitable. It's going to happen, whether it's this year or next year. I think it's next year, early next year or late this year. Oh, we don't know. I'm not going to make predictions, but it depends on this information and like the 2-year giving us rate cuts, and the rate cuts come, which I'll quickly show you. Sorry, wrong one. The rate cuts, interest rates, which a lot of the times the rate cuts come, and that's signs of something's not right, and we get a recession after it. It doesn't happen all the time, but there's these big rate cuts happen into recession because the Fed's reacting to bad data, which in this case was unemployment. So that's why it went down. It's the same with this one. Unemployment went down. Unemployment went down. They reacted to that and it went down. Okay. They didn't have an inflation problem here or here or here. This is unemployment. What's happening now is the same thing. This is a different. This is sort of a black swan event. So it came out of nowhere. It was really short lived. But get a cut, and we'll see another chart I'll bring up, which talks about the unemployment rate. So the UN rate, and we're starting to tick up. You get to starts to really break up, we'll see him cut aggressively, okay? And that means red recession. We'll get another red area shaded. So I believe it's inevitable. It's going to come, okay? And yeah, so very, very interesting. We'll have to wait and see what happens there. But yields are very, very good sort of sign for the Fed to act because it give you a sort of clear indication, like a heads up that the markets aren't quite what you think they're going to be. You look at the stock market outperforming. You can look at these stocks and they're all down. Mag 7, this is the top 5, but 2.5% down. Apple's down 2%. Nvidia's down. Really bad wick there. Google, I'll just go through them. Bang, bang, bang. All bad, bad, bad. I'm going to touch this trend line. So, yeah. And then you had gold up, but today we're sort of down. Copper, like I mentioned in the other video, that this could lead to inflation coming up, but it's had a big down move in copper. Okay, this is the weekly. I should show you the daily on the other ones, but you get the idea. Big move for copper down based on the inflation news. Okay, so this could come back down, and we could have a deflationary period and also deflationary crash in the stock market. And the crypto markets were sort of like a bit in phase, really bite. Wasn't really focus for the traders this day. It's mainly the rotation in the different sectors in the stock market and the yields that tell us sort of what sort of happened there. And so that sort of shock, big drop off in inflation. So I'll just quickly show you the inflationary chart, which is just here. And yeah, we had a big move down. We're back to June of last year. So back basically a year ago, right at this sort of point where we need to really break down and head down here for it to come down to 2%, which is their target, but the Fed, but it's over time, okay? So take it as you will. Yeah, so we'll have to see what happens here. And I think they have it under control, personally. I think they want it down a little bit above 2%, which is fine. I'm sort of happy with that. Powell did say that, is having it over 2% for some time is quite in line with their goals and expectations of inflation on the trend it's heading. It's the thing that's really what concerns me about what's going to happen, what the session could be caused by, is the unemployment rate continuing up, because we're just across the green here. Every time it's happened, recession, 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 it's green, recession, 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 recession. I can keep going and going and going. Recession, 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 and recession goes back to the late 40s. Did have a time, we had some green here. It didn't break to the upside. So there are some fake outs, okay? There's a fake out here. And I believe that's it. Yeah, that's it. Okay, so there are fake outs. So there could be a fake out and goes back down again. Have to wait and see that one. But yeah, I'll just quickly go over the commodity. I'll just go back to gold. That's big move. And it likes the news, the 2%. So gold continues higher and it's got to break through this level here. All right, big level here, as you can see at 2.4, break up and risk off, guys. That's all I'm going to say. I'll show you something really interesting with gold just before we end this video. I just want to show you period 2019. I'll show you something really interesting with gold. And it marks at the top for Bitcoin. It's a local top. So we had in 2019, okay, we had a little peak here. What happened to gold? Gold broke out, okay. So you can see, might zoom out a bit more. So you had a peak here, okay, a peak here, two peaks here. So we couldn't break this level since 2016. 2019 happened. Okay. Couldn't break it. I'll go back a little bit. And then gold broke out. Right. What happened to Bitcoin? It topped and Bitcoin went down as gold broke out. At this time, what happened? What the hell happened to this recent peak here? All right. Draw a line, goes across. We had a peak. All right. Peak here, peak here, peak here. And what happened to gold? Eventually, right here, it broke up. What happened to Bitcoin? It topped. So interesting. And I'll show you another chart that really shows this as well. I believe it's the total 3 chart. Could be, yeah, there is there. So gold broke out here. What happened to total 3? We sold off. Gold broke out here. What happened to total 3? We sold off. So yeah. And so what happened to 2019? We had a brutal sell-off. Almost came back down to here. Then we had the flash crash, which did bring us below this level. Okay, slightly by a little wick. All right. So this could happen this time. For the old coin market, we could see a bit more chop and then back down to the lows into the recession, into early next year, or going into the mid-year could last a lot longer. These would sell off a lot more than the big stock market companies, and risk Bitcoin and the lower risk sector, the old coins will get absolutely obliterated. So don't be surprised, okay? It's because we've got a good inflation print. Inflation looks like it's trending down. Just look at the unemployment rate, like I mentioned, to see where recession is inbound. And what I'm just waiting for the unemployment rate is this great indicator, this SARM rule, which gets at 0.5, which is a yellow line every time it's happened. As you can see, recession. With a fake out here in 1969 December, but then it sort of caught back up and then it broke through. Okay, so recession, broke through, recession, 2008 to 2020, and we're just about to break it now. So it's inevitable. It's going to happen. Be prepared, all right? That's all I'm telling you guys. Because, you might see a rotation now. Like I mentioned before, we have a rotation from NASDAQ to this Russell small cap stocks. It doesn't mean it's risk on, all right? This could be a short-lived rally for small stocks, but just be careful, all right? Just be very, very, very careful with this rotation. How long it can last, I'd be risk off right now. I wouldn't trust this. This could be a very short pump and dump, as they say. All right, so yeah, be careful in that sense. All right, guys, it's been a fairly long video, but I just wanted to cover those charts and information regarding inflation as the print just came in lower than expected at 3%. And yeah, I just hope you enjoyed all that data and information that looks at what's going to happen towards the end of the year and what you guys have to sort of look at yourselves, prepare, and yeah, don't get caught off guard. Don't take too much risks because the sectors are sort of rotating into more risky small stocks, and we do have some rotation in a defensive as well. So not just small stocks, but defensive. So we have some, risk off rotation and also small caps, which is quite really odd. So yes, and gold, as you see, is going up. All right, so risk off again, which I mentioned. So yeah, take what you will, what you think. And I hope you enjoyed this video. Please smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.